So the intent of this class, and today I'm going to start out with our syllabus. Chrome, here we go. This class is called Applied Equity Analysis and Portfolio Management, BMGT 443. Been teaching this class now for 14 years. My name is Joseph Perfetti. That is my email address. That's my cell phone. This semester, we will be completely online. We will not be in Van Munching Hall. This class is going to teach you basically, if you think about the course objective, to approach a business and understand the valuation from that of a sell-side equity analysis. It will cover 4 general topics this semester. We'll talk about how we can better understand a company historically. We also are going to talk about the industry and the external environment, because that's half the performance of any business. We're going to talk about how to do valuation, and we will actually build a real-world cash flow valuation model. And we will also talk about multiples as a way to do an alternative form of valuation. So those are the 4 real-world concepts we are going to be covering. The other thing is that this class does require Bloomberg Professional. So if you're not familiar with Bloomberg, it is the pro tool used by Wall Street. So you will become certified in using Bloomberg, and the vast majority of your assignments will be using Bloomberg. So basically, this is a real-world class. It's basically a culmination of your undergraduate studies and fairly multidisciplinary. The TAs for the class, we have 3 of them. All 3 of these TAs have been undergraduate students in this class. So they've been in your shoes. They not only are grading the content, but because their TA is responsible for all non-exam grading and non-group project grading. But as I said, they've been students in 443. They did well in 443, and they also TA'd last semester for 443. So they're really good resources to use as well for office hours. Again, just syllabus kind of reads itself, but I'm going to highlight a few things. Very important. This is going to be an online class this semester. Almost every class will be in Zoom when we have a lecture, although there will be a couple of video classes non-Zoom, and then there'll be what we'll call lab assignments, where you'll basically be given class time to work on one of your projects or homework assignments, which will involve using Bloomberg. You do need to have attendance, even though this is a virtual class. The way that we mark attendance, you'll notice that you had to register for this class. The Zoom registration says that you are here for this class. And then we assume that you have to be here for at least 60% of the class time to be considered attending. So if you just register, show up and leave, that's not considered non-attendance. In terms of group projects, this is going to be very important. Group projects are half of your grade. There will be 5 group projects throughout the semester for 50% of your grade. If you do not participate in those group projects, you will not pass this class. So that's going to be very important that you have half your grade as individual assignments, half your grade is working with a team and doing group projects. The cadence for individual assignments, there are 11 individual homework assignments spread out over the semester, basically 1 a week. Assignments will generally be given out on Wednesday, and they'll be due by Monday at 7 a.m. Okay, and the vast majority of them will also require the use of Bloomberg. So in terms of assignments and deadlines, I just want to be very clear as we start the semester. We take deadlines seriously in this class, and we will treat you like an adult. If you miss the deadline and you turn in any assignment late, it will not be graded. You will not get credit. Okay, so very important. Make sure you turn in assignments by deadlines, no exceptions. Okay, now 2 things. 1, if you talk to us before the deadline, we can be flexible about deadlines. Okay, so if you do need to miss a deadline, make sure that you talk to us before the deadline. All 3 ETAs and or myself can give you an extension, okay? But it must be in writing. And if you don't have it in writing and you say, well, I talked to the TA and they told me, nope, won't count. Must be in writing before a deadline, okay? If for some reason you miss the deadline, the only other way that an assignment will give you credit is if you have a university approved absence. You got COVID, some of your family died, etc. You're in the hospital, okay, all right, we'll consider those as excused absences. But other than that, if you miss a deadline, don't ask us to grade it, you're not going to get credit. The other thing that's very important is that in this class, writing a lot of words does not count. So it is not our responsibility to look through your answer and hope that somewhere in the words that you write, maybe we will find something to give you credit, right? So two things. One, the words that you write better have the right answer in it, because we're not just going to give you credit for trying. And number two, in this class, you must use numbers whenever you answer a question. General vague statements receive no credit, even if they're right. So let's just say, I'll ask the question, is this an attractive industry? Well, that's 50-50. I mean, you could guess and half the time be right. It doesn't mean that you actually understand the answer to the question. So if I say, is this an attractive industry? And you say yes, you go blah, 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 then I'm not going to give you any credit. You have to give me numbers that show me why and demonstrate it is an attractive industry. So very important to every assignment, both verbal, when you do team presentations, and written, use numbers. Few other things that are going to matter. As I said, all the classes will be on Zoom. We will record the Zooms and post the Zooms. I will also be posting one section of each of the 4 classes on my YouTube channel, mainly because I think that Panopto sucks and it's not very user-friendly. So I'll also post it out publicly on the web on YouTube. So another way to watch it on any device, right? We are using the 7th edition of the Valuation book. Basically, that's the only text for the semester. The readings are posted on the syllabus. You're expected to keep up with that as we go through the semester. Starting on Wednesday, you're going to be assigned randomly to a project group, and group projects start next Monday. So basically, when you go to those groups, make sure you meet all the people in the groups, because as I said, 50% of your grade, 10% for each of 5 different group assignments is your group grade and your group project. And if you don't participate in those groups, as I said, you will fail this class. I had to do that to 3 students last semester. They didn't take me seriously. They never showed up for their group projects. They did not pass the class. So I don't want to see that happen to you. Bloomberg Trading Challenge is one of the group projects. That's the one that's going to start next week. Basically, we're going to put it into 2 sprints, and using Bloomberg, each of your teams is going to get $1 million hypothetical dollars, but otherwise you're going to trade real world equities against your competition for the highest portfolio value. And you're going to be graded competitively against your peers, so that halfway through the semester, the team with the highest portfolio value gets the best grade. The team with the lowest portfolio value gets the worst grade, and everybody is ranked individually between that. We'll then reset the trading competition halfway through the semester, and we'll do another one for this, another sprint for the final 6 weeks of the semester. Bloomberg Professional is critical to this class. I'm going to show it to you in just a minute, but basically you will need an account. You will need to complete the Bloomberg certification in the next 3 weeks. And as I said, almost every assignment will be using Bloomberg. You will not be able to pass this class if you are not proficient in using Bloomberg. Grading for this class is on a 100-point scale. The way that you earn grades in this class is you accumulate points across all assignment. So the grade on any individual assignment doesn't really matter. Most assignments are 2 points, right? You could skip one assignment, still make 98 points for the semester. So the point is you accumulate points across all assignments. 5 points or 5% of your grade is Bloomberg certification, okay? 40 points or 40% of your grade are 4 10-point group projects. One on EIC, one on historical analysis, one on valuation, one on multiple analysis. They will be spread evenly through the semester. 25% of your grade, or 25 points, are the 11 individual homework assignments, which I may make one of them in class as we go through the semester. 10% is your midterm, which you'll take in April, I believe, or March or April, so it's on the syllabus. 10% is the 5th group trading project, the Bloomberg trading competition. That is a group project. 5% for each half of the semester sprints, and 10% is the final exam. Okay. Attendance, again, it's up to you whether you want to show up, but I'll give you a bonus if you're thinking about why would I want to show up for this class. But basically, there could be a mandatory attendance day if I have a guest speaker. Those days are going to be very important. You miss a mandatory attendance day, there will be a grade penalty for mandatory attendance days. And I'll tell you what they are as we go through the semester. Midterm and final exam will be taken during class. So you'll take them online with Canvas. Need to follow the honor code. We do in this class follow the university policy that course assistance websites are prohibited. So you cannot use any course assistance website or any past class material to answer questions for this semester. If you use any of that, you'll be considered an honor code violation sent to the honor policy. Talked about the late assignment policy. You'll do an evaluation for this class at the end of the semester. And again, if you have any special needs, talk to me as soon as possible. If you have a DSS accommodation, you're on a sports team, whatever it is, talk to us. Again, if you talk to us, we can help you. We, myself or the TAs, can be flexible. Okay. If you don't talk to us, we can't help you. And when you miss those deadlines, we are going to be inflexible. So just remember that as the rule as we go through the semester. The other rule, which I enforce with the TAs, is I will treat you no differently than the other 160 students that are registered for this class, which means when you ask me for that exception, I'd have to give the exception to anybody else consistently across all 160 students, right? And that's why we take deadlines seriously, because every student that misses a deadline is not going to get credit. And insert your story here doesn't matter. You're going to be treated like everybody else. Okay, that's the only way we ensure fairness in this class. So the flip side of it is that I will give every student in this class the benefit of the doubt if you talk to us before a deadline. Okay, so please talk to us before deadlines. And if unfortunately you get COVID throughout this semester, please alert me so that we can work with you on whatever appropriate schedule as you recover. Okay. Now, the final two things I want to mention here is there are two potential, we'll call it extra credit opportunities for the semester. The first one is probably more important to you, which is called the final exam opt-out. If you do all the individual assignments and you don't miss any, and you get a minimum score, and you get a minimum score in the midterm exam, and you don't screw up on the group projects and get sent to the honor council or get peer reviewed down that you didn't participate, then you won't have to take the final exam. So you'll just get the points for the final exam and you'll be able to opt out. Okay. If you don't meet any of those criteria, then you will not be able to opt out of the final exam. You'll take it on the final day of class. Now, I do believe in indulgences. So there is one homework replacement assignment that is in the assignment list. You can take this homework replacement assignment anytime this semester up until May 2nd. It's basically a 500-word paper. If you submit the assignment replacement, then what we will do is for any one of these individual assignments that you missed or didn't do well on, we'll replace it with a full score and treat it as if you didn't miss it. So let's just say that you didn't do homework 3, okay, for whatever reason. Valentine's Day, you're like, don't feel like doing it. Didn't submit it at all. All right. You don't do homework 3, you lose 2 points and you lose your ability to opt out of the final exam. However, if you go down here and do the assignment replacement, we will treat it as if you submitted homework 3 and got the full grade. Okay. And then you will be able to opt out of the final exam, assuming you completed the other assignments. Okay. So the assignment replacement is so that if you screw up on any one of these individual homework assignments, you can actually replace them with a full grade. Okay, that's called the assignment replacement. Right. These are the list of the deadlines. Pretty straightforward. As we go through, you'll see the cadence of the class and the readings. And again, the assignments are on the list. Questions about any of this? I know it was a long monologue.
I have a quick question. So if you do like on the Bloomberg trading competition, let's say like your group does very bad and just like it's 2-1 scores for gets the minimum grade. How would that affect the 60% requirement on all assignments and for the opt-out for the final exam?
Great question. So you'll notice I kind of hedge my words very deliberately. Team projects do not count towards the opt-out for the final exam. So if you score worst place for both sides of the Bloomberg trading competition, you can still opt out of the final exam, subject to completing all of the group projects. Okay, so as long as you complete the group projects and are participating in them, then I'm not going to count the group projects for that reason against your final exam. However, if you don't participate in one or more of the group projects and you are peer reviewed down by your peers to say, this person didn't do anything, then you not only will you hurt your grade in your group project, but then you will not be able to opt out of the final exam. Okay, so and by the way, I have one other rule for opting out. If I send you the honor council, you cannot opt out. Okay, and that hopefully does not apply to anybody. All right, good question. Any other questions? All right. So,
Professor, I just have one more question.
Yes.
So in terms of your YouTube channel, you said you've been teaching this stuff for 14 years. Is this your first year starting a YouTube channel, or is this something that has been done before?
No, as a matter of fact, let's see if I can find a way to go here. So we go to youtube.com/Joe Perfetti. My name is Joe Perfetti. It's going to start playing automatic stuff. But you'll notice here in my list of videos, there's a lot of them. And there are previous classes in previous years where I've done this on YouTube. So those are obviously fair game. You can walk through about 300 videos on here. So again, I will be recording new ones throughout the semester. Okay. But again, watching old YouTube videos, okay. Using old course websites, not okay. Okay. But again, I'm not saying you have to come here and watch my 300 videos. Like that's not what I'm advocating. But what'll happen is as we do new classes, I will start posting videos here just so that it's an alternative to Panopto, because I think Panopto sucks. I know it's a university tool that we have to use, but I find it difficult to work on any device anywhere. So you give you YouTube as a second alternative. All right.
Thank you.
Sure. Other questions? Anything?
For the group projects, is it are we always working with the same group that we're assigned?
Correct.
Okay.
Yeah, you'll be assigned to one group this week, and that's going to be your group for the entire semester. So make sure that if you don't know those people, because very quickly, if you don't know those people, it's going to cause you a problem. All right, so in Elms, in the file section, there is a folder. Go back to it. Files, lecture notes, and today we are going to cover lecture 1. Or I should say today and Wednesday. We will not finish up lecture 1 by the end of the week. So let me open up lecture note 1. display. For some reason. Okay. Back to Zoom. All right. Oh, I've got to change the date on it for spring 22, but I'm not changing the lecture note for last semester. So 4 cornerstones of value creation. This is basically a summary of some of the key themes that are in the McKinsey textbook on valuation, which is the Bible on Wall Street for corporate finance and valuation. Okay. So McKinsey's done a great job over the years in organizing what matters academically meets the real world in terms of valuation and valuation principles. These are a summary of the 4 themes that we're going to be covering this semester. So I'm going to start out with the first one. The first of the 4 cornerstones is basically the concept of spread, right? You know this from all of your finance classes, that you cannot create positive NPV if you don't have an IRR greater than your R, your cost of capital or your hurdle rate. Well, the same is true in the real world, right? That eventually the value of a company is going to go down to spread. Can you earn what we're going to call a return on invested capital greater than your cost of capital? Over time, if you can't do that, you can't create value, okay? But 2 things are going to start to emerge from that. Number 1, growth does not create value, right? So let's say that your hurdle rate is 8%, and let's say that your return is 3%. If you borrow at 8 and you make 3, you can't do more of that and get yourself out of a hole, okay? So growth is the accelerant to value. If you borrow at 8 and you make 13, you want to do that all day long. So it becomes the growth return combination that matters to value. Okay. The other thing is that half your spread is your industry. Your industry is more important to an investor than your company. Warren Buffett, very famous investor, runs Berkshire Hathaway, says, look, I don't invest in companies. I invest in industries. Then I pick the company that's going to win in that order. Because if I fall in love with a company and they're in a bad industry, there's nothing that they can do. And so again, you could think about it sort of conceptually. Like if you're in a bad business, it doesn't matter how well you execute, you're not going to make a lot of money. If you're in a great business, you can be average and still make a lot of money. Industry matters. It's half your performance. Remember that as we do valuation this semester. It's one of the reasons why the first concept I'm going to give you this semester is called EIC, Economy, Industry, Company, because that external analysis is going to be very important to understand how companies and industries do. But it's one thing to talk about it. It's another thing to see it. So let me show this to you. So this is Bloomberg Professional, also known as the Bloomberg or just Bloomberg for short. It is Michael Bloomberg's company, former mayor of New York. It's why he's a billionaire. They have about 320,000 users worldwide in the finance community of this software. This software costs $25,000 per year per user as the base price on a subscription model. So do the math. It's very, very expensive software. This semester, all of you will be able to access Bloomberg Professional for free. And you will need to do this as part of this class. More on that later. So there are 1.4 million companies of real-time information in Bloomberg. It's got debt, it's got equity. Besides debt and equity, it's got currencies, commodities. Heck, you can check your Bitcoin on here or whatever other stupid crypto you're investing in. All of that is in here. It's a trading platform. It's a messaging and social media platform. It's a news platform, all in one. Okay? But for purposes of this conversation, somebody give me a publicly traded company. Any publicly traded company anywhere in the world.
Southwest Airlines.
Better known as Love. So when you start typing in either the ticker symbol or the name of the company, what you're going to learn as you get certified is down here are what they call the securities, the companies, and up here it's like a Google search for other information that you put in this top line. So in this case, I'm going to look at Southwest Airlines. In fact, I'll show you the opposite. Southwest, right? So that's the company. Ticker symbol LUV. It's a US company and it's the equity. LUV Corp is debt or their fixed income. So I'll click on here and it will give me a menu of a bunch of different data points that I can look at. Across the top of the screen is the current share price. Market is not open, they're 43.37. But what I'm going to go down to is one of the core features we're going to use this semester is called RV or relative valuation. This is where it will do real-time peer analysis. So the default list are the analyst curated peers. So the sell side analysts are working on Wall Street today. This is their default list of peers for Southwest Airlines. This is the global low cost list. If I want to switch, I can switch to the North American low cost airlines list. Okay. Or I can look at them across all US airlines. Okay. So I'll start here. Now, it's got all these predefined templates of all these data points that you can get, or I can come over here to custom, which I'm going to do. And this is going to be important to your first graded homework assignment, is I can actually look up any data points that I want. And down here where it says add column, it's asking me what data point do I want to give. So the data point that I'm going to give is called ROIC, which stands for return on invested capital. Very core concept this semester, right? So basically I click on ROIC, it's a Bloomberg field, standard field. And then Bloomberg's going to ask me, which ROIC do I want, right? And we're going to take the one from the latest filing, annualized for the previous 12 months. So probably through the end of December. And then when I hit enter, what's nice is this top row, it's called the market cap weighted average. That's the average of the industry of all the people on this list. So what's also nice about Bloomberg is it gives you real-time industry averages. And where this market cap weighted average comes from is over here on settings, under global settings and your individual account. It has all of these statistics that you can add. The statistic that I have added is called market cap weighted average. Okay. In your default tool, when you actually sign up for an account, your data is going to actually look like this. They have this annoying top section, which I hate because it just takes up screen real estate and doesn't really give me a lot of information. And it doesn't have the industry average on it. So one of the things you're going to learn in your certification is you can come in here to your own settings, global settings. You can get rid of this top section by unchecking that. And then you can add in the market cap weighted average by checking that. And then when you close, the annoying top section will go away and the industry average will show up. That's going to be very important, as I said, to your individual assignment. So here's what's important. Again, as I add, maybe click on the list at resource. But as I add an ROIC for the latest filing. So again, top line industry average. And then this is the last 12 months ROIC for each of these companies. Remember, ROIC is cash flow. So if I give you $1 and you have negative 0.88 cents, that means you're losing 1 cent of cash profit per dollar of investment. Okay. And then I'm going to add in something called WACC. WACC is the current weighted average cost of capital today. The difference between the WACC and the ROIC, or ROIC and WACC, is called spread. ROIC minus WACC equals spread. Positive spread, good. Negative spread, bad. In fact, for those of you that can't do math, here is spread, which is called ROIC minus WACC. So first question is a hint of what you're going to do in the EIC. Is this an attractive industry? Is this industry creating value?
No.
Because it has a negative spread. And the answer to the question would be because the WACC is 8.62 and the ROIC is negative 0.88. And therefore this industry has a negative spread and therefore it's not creating value. What about Southwest? How are they doing?
They're doing relatively better than the industry.
Correct. But are they creating value?
No,
Is there anybody in this list creating value?
no.
That's my point. Industry matters. It's COVID. In a time of COVID, when the airline industry lost the business traveler, still hasn't fully come back, and when they're still short on a lot of demand versus pre-pandemic, how do you make money? And that's, again, back to the idea. Some might do relatively better than others, but it's a really, really tough industry right now. And that's the point. Now, what's nice about Bloomberg is this little gear icon, and you can click on it and you can save this as a reusable template. And you can use up to 11 characters. So let's call it 443 spread. And I'll save it. And when I save it, it will put it here on a list of reusable templates. So that way, next time I come in here, I don't have to recreate the whole thing, but I've previously created stays. And more importantly, if I change the company, it will just repopulate it with a different company. Somebody give me another company. Another company, another industry.
Lockheed Martin.
Lockheed Martin, LMT. There's Lockheed Martin. I replace it. And this is aerospace and defense. Is this industry attractive?
Yes,
Creating a lot of value. How's Lockheed Martin doing?
better than the average.
Yeah, they're doing really, really well. We call that competitive advantage of this class, by the way. But here's the point. Different industry. Notice just about every company in this industry is doing much, much better. No one's losing money. It is hard in this industry to have a negative spread. There are some that do it, but it's just a much more forgiving industry. You see that in the industry performance, 16% ROIC, and you see it that many companies are doing really, really well. Industry matters. Give me another business, another industry.
Amazon.
Amazon. What do you think about this industry?
They're doing worse than I would have expected.
But is this industry creating value?
Slightly for Amazon, but looks like the lower companies aren't that much.
And Amazon's doing it at scale. Okay. So again, this is more closer to a break-even industry, a little bit tougher performance than some of the others. Anybody else I'll look at?
Johnson and Johnson.
Here's pharmaceuticals. Big pharma. Generally a really attractive industry. You have to work hard, Bristol Myers, to not do well in this wonderful industry. Versus Costco. Discount retail is doing really well right now. Industry is making almost 15%, borrowing at 7. Costco is making 19%, borrowing at 7. But they're this weekend. Lines are long. It's a very forgiving industry right now. If you look at Ford and you look at the global auto industry, well, now you're seeing a different story. The global auto industry right now is a tough business. Two things are going on there. Number one, they're spending billions and billions of dollars trying to create sustainable transportation. They haven't sold any of those cars yet. So the ROIs are really low right now because they're spending a bunch of and they haven't had the sales and profit yet from those sustainable cars. And it's weighing on the entire industry. The other thing that's happening in this industry is there's a global chip shortage. You can't buy semiconductors now. There's been such a surge in semiconductor demand that it's hurting the automobile industry. For example, if you try and buy a BMW 3 or 5 series, it's a 2022 model, they took out the touchscreens. They put in traditional screens because there's not enough chips to go around. Cadillac in their top line SUV took out cruise control that worked almost like a Tesla because again, they couldn't make the chips to actually make the software work. So that was one of the big features they were going to do for this model year. They had to push back a model year because they don't have chips. Okay. So again, it's weighing on the industry versus if we look at somebody like an AMD, the chip industry in terms of semiconductors are booming because there is such short supply for this high level demand that the industry is averaging a 29% ROIC right now. And companies like AMD are making 65%. Companies like even Intel, which was struggling, is making 15%. So NVIDIA, 29% ROIC. Huge spreads, huge value creation. Probably won't last forever, but nonetheless, I can tell you all day long that industry matters. It's easy to see it in the real world. Questions about any of this?
Yeah, I just have one question. So I'm not sure if you mentioned it or not, but is this over a period of quarters, an entire year? How long is the time period on these?
This is the ROIC as of the latest filing. So it's annualized for 12 months. So in this case, since it's January 24th, it's going to be either their December results, if reported, Bloomberg's a real-time trading tool, or it would be their September results annualized, one of the two.
Okay.
Depending on what their latest filing was. If I wanted to go to a different time period, I could either right click on this and get more data, or I can come over here, actually right click. I can't right click on this. All right, so click on the gear again, and then I can add a column, the easiest way to do it. And then when I add a column to my save template, I can go back to ROIC. When I click on ROIC, I can do a latest quarter, so just 3 months worth of data. I could do a semi-annual, 6 months worth of data. I could do it based on their latest fiscal year. Or if I want to get really crazy, I can customize the period. And I could go to, for example, years ago, and I could go 3 years ago. So these were the ROICs for the chip makers 3 years ago, as opposed to today. So I can see trends over time.
Thank you. Very cool.
Sure. But this is as of latest filing, LF, which is the one that you're going to be using in your homework assignment. So back to the template. This is under RV. One of the other important features is you're going to be using Bloomberg in the cloud. You won't be able to install the software onto your desktop or laptop. Actually, let me rephrase. You can go to Bloomberg.com. You can actually download the software and you can put it on your laptop or desktop. But then every time you load it, it's going to ask you for a serial number, which you won't have. In order to get the serial number, they're going to ask you for a $25,000 payment, right? And by the way, they make minimum 2-year subscription. So actually, they're going to ask you for a $50,000 payment if you wanted to use this retail, right? And unless you're a billionaire, you're probably not going to just blow that money for this class. So how are you going to use Bloomberg? You're going to use Bloomberg in the cloud, which is free while you're a Maryland student. And I'm going to talk to you in a minute about how you get a Bloomberg account. But what's going to be very important to for all of your homework assignments is I'm going to tell you to take screenshots. Up at the right-hand corner, there is this little square with an arrow coming out of it. When you click on this menu, you have an ability to take a screenshot, okay? And you can either save the file as a screenshot. They'll give you a GIF file. You can print it out to a screen if you want to. You can view the screen as an image and then save it from that image in a browser into any software you want, or you can send this file to yourself as an email. Because when you get a Bloomberg account, you're going to get a Bloomberg email. And you can actually email stuff back and forth out of that account. So there's multiple ways to save the screenshot. I'll just save the screenshot. It'll pop up, and then you can basically save it to your desktop, thumb drive, whatever. Okay. But you will be needing to do that as part of your homework assignment, right? But this is the concept of spread. This is the first cornerstone of value creation. Okay. Second cornerstone of value creation, and I'm going to stay in Bloomberg just because I want to illustrate a couple things, is it's about cash flow, not income. Income is a piece of paper. In finance, we care more about cash flow because of timing, time value of money. Okay, so in the long run, income and cash are the same for a company, but because of timing, we tend to focus more on the cash flow, right? So that's going to be very important as we go through the semester. ROIC is a proxy for cash flow. That's why we use that as a metric. Cornerstone number 3. I'm surprised nobody pointed this out to me, but we have been making judgments on all of these companies and industries based on the past. All of these ROICs from Southwest Airlines through AMD are based on what happened last year. But we know in finance that what's more important is what's going to happen next year, because you're worth the sum of your future cash flows. And so basically, what I really care about is the third cornerstone is called expectation. What is the cash you're expected to generate? So in the real world, there are 2 groups of analysts that matters to. One of the groups is called the buy side. The other is called the sell side. I'm going to go back to Southwest Airlines. LUB as a working example. So let's say we're still trying to analyze the airline industry. I'm going to start out with their buy side. You can see the buy side by going to a screen called either ownership, own, or the quick way to do is HDS, which stands for holders or security ownership. And what you're going to learn in your Bloomberg certification training is Bloomberg has these short codes to menus, HDS holders, okay, which they've adopted over time, or you can start typing in holders, spell correctly, and then it'll tell you what the short code is. All right, so here's the point. When you go to HDS or own, it shows you the institutional ownership of a company. This is actually one of the most used screens in Bloomberg. So basically, here's what's important. 82.33% of Southwest Airlines shareholders are in this scrollable list. Top of the list, their largest shareholder, which is Vanguard, which owns 61.8 million shares of Vanguard stock or Southwest Airlines stock, which represents 10% of the total ownership of Southwest Airlines. Prime Cap, State Street, BlackRock, T. Rowe Price, FMR's Fidelity, Franklin Resources, Getty Capital, etc. Okay, so these are the people that buy and trade in large blocks of stock that are the real price setters for Southwest Airlines. Versus if you scroll down, here's somebody that owns like 1 share. So Fortis Advisors owns 1 share of Southwest stock. Now, if Fortis Advisors gets out of that position and sells their 1 share, who cares? It's not going to affect Southwest Airlines stock. But if Vanguard, which is their largest shareholder, buys a bunch of Southwest stock, that's going to actually drive up the share price. So these are the price setters. This is what's called the buy side. Okay. Now, let's say that you get a job for one of these firms. So you're working for, I don't know, Getty Capital Management, pick that one. And you're part of this fund in Getty Capital Management. You can actually click on the fund and you can see all of the shares that this fund owns. So another nice feature of Bloomberg is that you don't have to be Warren Buffett. You can actually look and see what Warren Buffett is doing and follow along, or any other mutual fund or ETF. So this fund by Getty Capital Management has all these positions in it, okay? 4,000 companies representing $43 billion. Now, let's just say that this fund was actively managed. How is a buy-sider, can you keep track of all of these different companies in your portfolio with all their competitors and all the industry knowledge on a daily basis to figure out what you should be doing with all these? If you're an ETF, it's one thing, but if you're actively managed, it's hard to keep up. So the short answer is you can't. So what you do is you rely on another type of analyst called the sell side, which you see in Bloomberg under ANR. Sorry, go back to Southwest Airlines first. So for Southwest Airlines, you rely on a group called the sell side, which are these 22 people who work for the banks, who do not own your stock, but write the buy, sell, hold research. And what's important to the buy, sell, hold research is that the sell side research, which Wall Street spends $4 billion a year on, is not for you and me. It's actually for the buy side institutions. So that's the point. BlackRock, Fidelity, all the funds hire these sell-siders who are specialists in an industry to tell them what to do. And these people paid a lot of attention to an industry. So for example, it's James Hollins of BNP Paribas, or Ravi Shankar of Morgan Stanley, or Brandon Oglensky of Barclays, or Michael Lindenberg of Deutsche Bank. So you got a lot of different analysts here. Okay. And so, for example, let's take Barclays, Brandon Oglend, whatever, can't pronounce this person's name. So if I want to see Brandon, his team covers these 32, looks like transportation companies. So that's actually pretty big for a sell side team. Most sell side teams who can choose their amount of people they want to do research on. So they set their own research criteria, but generally they cover between 10 to 16 companies. So this is actually a pretty big coverage universe for a team, because a typical team at a bank is 3 people. It's the lead analyst, it's an MBA, and it's an undergrad. Okay. And their role is just to write research on these companies, buy, sell, hold opinions. And you can actually click here, and this would be the research that they're publishing at Barclays, which you have access to through Bloomberg. Now, going back, the other thing you can see is if you want to see who Brandon is, this is Brandon. So this is Brandon's contact information, and hence those of you looking for jobs at Barclays. This is his phone number. That's his email. That's where he works in New York. A little bit of background on Brandon. Went to Georgia State, previous is Lehman. Now he works at Barclays. So again, what's nice about Bloomberg for job hunt is that it pretty much has everybody working on Wall Street's contact information in here. And it's also an IM tool. So if Brandon is online, you could actually IM him through Bloomberg. And that little dot right there will turn green when Brandon is online. Right now he has private status, so he's not sharing it publicly with the world. So he actually might be online now. He's just hiding his status. But nonetheless, you can IM him on Bloomberg. And by the way, when you IM somebody on Bloomberg, they respond to you because this is a trading platform and they might think that you're a broker dealer. Anyhow, back to this. So they're writing research on these companies, and the research is summarized here because all of these sell-side analysts upload their sell-side research to Bloomberg. So here's what they've said today. They all predict 12-month share prices. These are what they think Southwest Airlines share price is going to be in the next 12 months. Okay. How do they do that? Come back to that. But what Bloomberg does is it aggregates the 12-month share prices. Okay. Right there. So right now, the average 12-month share price of these 22 analysts guesses is $55 a share. This morning, Southwest is trading at $43.37. So the consensus at Wall Street in the next 12 months, there's 27% upside in Southwest Airlines. In the last 12 months, it's down 8.5%. Okay. 14 of them call them a buy. Buy basically means they expect the stock price to go up more than 10%. Buys are worth 5 points. 7 of them call Southwest a hold. Holds are worth 3 points. Sells, one says sell. Sells are worth 1 point. On a 5-point scale, Southwest is currently a 4.18 out of 5, but these people can update these recommendations at any time. Now you might say, well, how do they come up with the share price? These are their actual Excel models forecasting Southwest Airlines. If you have access, and you'll notice they're locked, so I don't have access. You can request access by buying their research, but you can actually get access to their Excel models because they upload them to Bloomberg for sale. These are where Bloomberg aggregates their individual Excel models and publicly shows the data. Because what Bloomberg is trying to do is it's trying to standardize for Wall Street the consensus for the other analysts and investors to see, which is the average of all of the sell side analyst guesses. And by the way, when they're forecasting Southwest Airlines, they're not just forecasting revenue, they're forecasting, for example, load factors, seat miles, etc. And you can change your period from annual to quarterly forecasts. If you want to look at a multi-period forecast by an analyst, you can do that here. But these are the estimates of the forecast, historical data and forecasted data of the pros who are specialists in the industry. The real screen that we're going to use this semester is called EEO. Burn that one into your brain because you're going to use the screen more than anyone else this semester. This screen is called the earnings estimate overview. What it does is it aggregates all the future guesses, and this becomes what's known as the consensus estimate database. So if you ever read in the Wall Street Journal or Bloomberg.com or Financial Times that a company missed or met their estimates, it's based on the data on this screen. Okay, so for example, last year, 2020, they're about to report 2021, they did 9 billion in sales. This year, they're expected to have 15.7 billion in sales. 2022, 21.8 billion in sales. 2023, 24.89 billion in sales. 2024, 26.5 billion in sales. Okay, so if you scroll down, you can see forecasted return on equity, forecasted free cash flow. All these in white are forecasts. All these in yellow are historical. And I can go back if I want to see, for example, pre-pandemic, Southwest had 22 billion in sales. First year of the pandemic, 9 billion. This year, 15. Next year, 22. It's going to be until end of 22, and they still haven't passed their 2019 revenue. That's the current forecast for Wall Street. I'm going to pause. Questions about any of this? All right. So again, if I wanted to look at a different company, like we were talking about discount retail, say I want to look at Walmart. This would be Walmart's historical data, Walmart's next 4 years. Focusing on top line revenue, last year Walmart was 559 billion in sales. By 2025, they're expected to be 631 billion in sales. 780 of EPS, last year 548 EPS. So you want to see what a company's expectations are? This is what Wall Street's consensus is. Versus, so I mentioned Amazon. There's the difference in retail between Walmart and Amazon. Last year, Amazon 386 billion in sales. By 2024, Amazon 737 billion in sales. So somewhere between 23 and 24, Amazon is expected to pass Walmart as largest retailer in the world. They're expected to double in size over the next 3 years. So back to Amazon, if you wonder why Jeff Bezos built such a valuable company, their growth, and this is all organic, non-acquisitions, is still exploding. Where Walmart's growing 3% a year. So again, we can start to get some different trajectories of companies. And that's the point. If you're looking backwards on Yahoo Finance or Google or one of those other sites that gives you historical data, I mean, you might as well be out. I watched Monty Python and Spam-A-Lot recently and Quest for the Holy Grail. And you're like that Dark Knight getting all his arms and legs chopped off, trying to fight. Because you're just looking at historical data, trying to understand the future. You're just, I mean, it's not even a fair competition. So what you're getting access to is Wall Street's real view by the professionals of what the future is. I'm not saying you're going to guarantee to hit this future, but this is the future that is going to drive share prices and drive valuations. So anyways, that's the third cornerstone. Questions about any of this? All right. So back to our PowerPoint. Fourth cornerstone of value creation is competitive advantage. Over the long run, you're going to be an average company, or you might go away. By 2025, we're going to lose half of the S&P 500 every 12 years, right? It's disruption. And there are going to be companies like JCPenney, which I don't even know why they exist anymore. Has anyone even been to a JCPenney recently? Like, what's the point, right? And then you're going to have companies like Amazon, all right, who are getting bigger and more dominant. And so the point is, if you look at the list of the S&P 500, half those companies are going to be gone about every decade, starting in 2025. And so that's the point. How do you stay relevant long-term? You got to be relevant in a way that gives you some form of advantage over the other companies to stay on that list. So what is that advantage? And how long does it last? Right? Because if you're going to be above average spread, you better be doing something better than your peers, and it better be a defensible position. So what is it? How do we understand it? And again, nothing lasts forever. Darwin is constantly at work at the marketplace, and we have to be sensitive to the time that things last. How long before the industry growth slows? How long before you slow? How long before your competitors catch up? Right? So timing starts to matter when we think about competitive advantage. That's a lot of the fourth cornerstone that we're going to be going through. This is a good stopping point for day one's first day of class for content. So I want to come back and talk to you about something very important before we leave and adjourn for today on something that you will need to do. Okay. But before I leave the content behind, questions about anything we've talked about so far today? Well, one of the things that's going to be important to you, so I'm going to go back to Chrome here, is how do you get access to Bloomberg, the tool that we're going to be using this semester. So the way that you're going to get access to Bloomberg, as I put it up here in the announcements, and it's the Bloomberg remote access announcement that's here under the announcement links. Okay, so basically we have 60 terminals or 60 people that can be simultaneously logged in at the university. Okay, now when we teach this class at Van Munching Hall, most of the terminals are in a teaching lab, 32 of them in Van Munching Hall 3505. Okay, but because of COVID, Bloomberg has put us into what they call their disaster recovery mode, and they're allowing us to use all of the Bloomberg licenses online. Okay, now if they end this disaster protocol, you will have to go to the school to access the Bloomberg terminals, right? But there's actually an advantage to you right now, because right now you don't have to go to the school to access the Bloomberg terminals, and you can access them remotely. So that's a nice feature that Bloomberg is currently giving us. So in order to do that, this is what's going to be required. That is in the second announcement. So in order to do this, and there's a video outlining the steps, you need to go to the Bloomberg for Education portal on their website, right? And this is the web address, portal.bloombergforeducation.com, and then directly to sign up for an account /register. Register. Okay. Now, When you get to this portal login page, this is on that video link if you watch it in Vimeo. Basically, very important, it's going to ask you for your email address. You must sign up with a umd.edu email address. Okay, that's very important to this Bloomberg for Education sign up, because that's how it tells them that you're a University of Maryland student. So you either have to use your whatever what's it called, postmaster.umd.edu or umd.edu email address, and those are unique email addresses. So you have to use one of them consistently. But the point is, put in your email address, put in your name, say you're not a robot, hit sign up. Okay, you're going to sign up as a learner. Now, once you sign up, there's two things that you're going to do through this portal. So I'm going to go ahead and log in because I have an account as a professor. But once you sign up, two things are going to happen. Number one, under terminals, this is where, and I have a slightly different version of the screen, but under terminals, this is where you access Bloomberg. Okay, and it's a two-step process. So the first step is you have to create an account at the portal. Once you create an account at the portal, you have to let me know that you created an account at the Bloomberg portal using your umd.edu email address, or it's Chirpmail, the other one. I will then see you on this list. So let's say your name is, pick somebody here, Abdallah Farida, okay, who created this account way back in February 2018. Okay, now Abdallah has an account at Bloomberg for Education, but she does not have access to use the Bloomberg terminal, the software that I just went through. In order for that to happen, I have to come over here as the instructor and click on this box and basically assign her to use one of our 55 terminal accounts. Okay. Until that happens, she can't access the software. Well, that will be true with you as well. So what's very important is after you've created a portal account, I need to know that you did this. How do I know that you did this? Then what you're going to do is you're going to go back to this process. And what's going to tell me is on announcements, you're going to go to this Google form and you're going to fill it out. And what this Google form basically has is it says, okay, create your account. There's the videos, different ways to get basically tell you the same information. Verify your UMD email address. Click on terminal access, but you won't be able to access the terminal. And then tell me the name you used and the umd.edu address you used when you registered for your Bloomberg portal account. I will then go in, because I'm going to check this Google form that you're filling out. I will then authorize you for Bloomberg. Okay, so I'll go in here, because once you tell me to look for you and I know who to look for, I'll check this box, giving you access and let you know I checked it. You will then finish the registration. Okay, and then you can finish the registration. You can use the online terminal. Okay, but there's a second step that's part of this. Bloomberg also has something called BMC certification, which stands for Bloomberg Market Concepts. And this is their certification, okay, to use the tool. Basically teaches you how to use the tool. And this is important because once you're certified, you can actually put it on your resume and you can tell people you're certified in the real world. Okay, it gives you a nice little form saying you're certified. Now, typically they charge $149 for the online certification. The cost to you as a UMD student is free, but the only way they waive this $149 fee is if you sign up for the portal with a umd.edu email account. If you do not use a umd.edu email account, you don't waive the $149 fee, and I will not give you access to Bloomberg. So you must use a UMD email. So what that means is back on this portal, there's another link at the top. Terminals is where you access the terminal, called BMC. And this is where you take the certification on the web. Okay. To be certified, you see these little certificates? These are the 4 sections that you have to complete to become Bloomberg certified. Okay. So again, when you sign up for the portal, which you should be doing even right now, 2 things are going to happen in this portal. Number 1, once you sign up and you let me know about it in the Google form, I will be able to authorize you and then tell you that you can go back to the portal and access the terminal. And then number 2, you can also go to the portal and take your BMC certification, which is 5% of your semester grade and is due on February 11th at midnight. So you have until end of day Friday, February 11th, to finish the online certification. The online certification is going to take you 7 to 8 hours to do each of these modules. Click through and you can start and stop. Okay. But, and this is very important, and this is an extra step required for this class. When you go through these 4 modules, now you can also go through additional modules, but they're not part of the BMG certifications. These are optional. These are the required ones. When you go through each of these modules, which will take you, required for certificate, which will take you 1 to 3 hours each. The way they work is they'll give you text, they'll play a video, and then there will be a multiple choice quiz. You must get 70% or more of those multiple choice questions to be considered certified for this class. And you can only take the multiple choice questions once. So if you blow through the quiz and you don't get 70% on any of the modules, you will not be certified, even if you complete the module, and you will lose 5% of your semester grade. And I'm telling you, the questions are ticky-tack, because if you don't watch the videos and you don't read the material, you will not be able to answer those multiple choice questions. I tried it. You won't be able to do it. And I'm pretty familiar with Bloomberg. So very important, you really do have to watch the videos and read the material to answer the questions. Otherwise, you will not pass. If you do not pass any of these 4 modules, you'll have to start over with another email address. That's the only way. There is no way to reset the quiz. You can only take it one time. And if you don't get 70% right on any of the 4 sections, you can't be certified. So again, just giving you a heads up as you go through this process. And all 160 people registered for this class have to be Bloomberg certified by February 11th. I know that was a lot. Most important form, announcements. It's the one that's the Google Access form. That's the important link. Make sure that you let me know you've started the portal registration so I can authorize you for your Bloomberg account. Your first Bloomberg assignment is due 1 week from today. 2% of your semester grade, important for the final exam opt-out. So please try and get registered before Wednesday. Questions about any of that?
Do we need a 70% on all 4 of the modules or just on one of them?
Nope, all 4. The quizzes are not timed. So somebody asked in the chat, the quizzes timed? No, the quizzes are not timed. And as I said, you can pause the certification anytime you go through it. So if you stop, you can come back to, and Bloomberg will remember the screen that you were on when you go back to it. So you don't have to go through the certification all at once. You got 3 weeks to do it. I'm actually going to give you time in class in 2 weeks, the final week before the certification, to do it as well, because this is just such a critical part to the class. And the reason it's critical is because we use Bloomberg so much in this semester. If you don't know how to use Bloomberg, you don't have an account, you might as well drop the class, because that is actually just, you will know how to use this tool by the end of the semester, because we're going to use it, as I said, for just about every assignment. So somebody says, how can we use a different email address if we only have one for school at umd.edu? Give you a little trick, and I'll show it to you here real quick. When you go and log in under terminals, you'll notice that people either logged in for maaron@umd.edu or marbakar@umd.edu. But you also have some people who, like, this is why this person never got an account at Hotmail, don't pay attention to instructions. But here's an Abel Madeline, or Madeline Abel, who registered at terpmail.umd.edu. And what I'm saying is, for purposes of Bloomberg, terpmail.umd.edu is a different address than m62able@umd.edu. So all of you have two different email addresses. And so you can start with those. So your backup is, if you screw up the first time, you can use your terpmail address. Or if you use your terpmail address the first time, you can use your plain UMD. But same thing, when you fill out that Google form, make sure you tell me which of those two emails you used. Because when I'm looking for you, there's 3,000 people on this list, or however many people on this, 2,800 people on this list. I'm trying to find your name. I'm not going to look for needles and haystacks in trying to give you access. That's why the Google form is so critical, to tell me how to find you in the list of potential users. Any other final questions? Great. Then look forward to this semester, and look forward to talking to everybody again on Wednesday. Get your certification started, get your portal started. See everybody on Wednesday. Have a good day.
Thank you.
Thank you, Professor.
Thank you.
Thank you.
Thank you.
Thank you.